Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. Stock markets down for the third session for the first time in 3 months. IT stocks take it on the chin. Mid-caps relatively outperform the blue chips. Crude oil prices rise amidst heightened tensions in the Middle East. Brent crude continues to hover around $90. Moody's Analytics warns that prices can cross the $100 mark if the Iran-Israel crisis escalates. Iran warns Israel of a painful response as the war of words continue. Israel calls for fresh sanctions on Iran. Israeli forces have promised to respond to Iran's drone and missile attacks.
Aditya Birla Capital has emerged as a key growth engine for our group, and I see this as a coming-of-age moment for Aditya Birla Capital.
Aditya Birla Group makes another big consumer push, launches a new financial services digital platform called ABCD, hopes to add 3 crore new customers in the next 3 years. Kumar Birla also announces plans to start jewellery retail business with an outlay of 5,000 crore rupees. Vodafone Idea's upcoming 18,000 crore rupee follow-on public offer gets government support. Finance Secretary TV Somanathan says India needs multiple telecom operators and preserving competition is a major policy goal of the government. The government owns a 32% stake in Vodafone Idea. Baba Ramdev appears for the third time in the Patanjali contempt case, addresses the Supreme Court directly, proposes a public apology. The court observes that Ramdev was apologizing only because his back was against the wall, says he's not off the hook yet, and schedules the next hearing for the 23rd of April. Prime Minister Modi campaigns in Bihar, where 4 seats go to the polls in the first phase on Friday. Rahul Gandhi holds a rally in Kerala's Wayanad, where he's hoping to get re-elected. The Bombay High Court pulls up the Enforcement Directorate for violating the right to sleep. Court rules that statements cannot be recorded at odd hours while responding to a petitioner who was arrested under a money laundering case. Well, as always, let's start with the market action. For the first time in 3 months, the sensex and the nifty declined for a third straight session. Mid-caps relatively outperformed the blue chips. The IT stocks were the biggest drags on the index. All IT stocks, in fact, closed in the red today. That's the sensex down 456 points. The nifty losing 120. The nifty mid-cap flat, closing in the red. Prashant is standing by now to take us through the market action. Prashant, 3 days on a trot, the market's closing in the red, and tomorrow, of course, we're off. No trade. What's the week looking like, and what's weighing on sentiment?
It's a mix. I mean, but if there are 2 dominating drivers, Shireen, it's geopolitics and it's US rates. Geopolitics, of course, we all know. It's, of course, I mean, markets on the edge waiting for a response from Israel. The Israeli administration essentially have said that they've got no option but to retaliate, and that's a quote. So when the scale of it and what happens after that, will there be a bigger flare-up? That's geopolitics. And rates, of course, is the US interest rates, at least market interest rates moving up. The 2-year in the US, for example, last night hit 5%. Briefly, but it did hit 5%. So, I mean, I think those are the 2 drivers which are leading to these losses that we've had, as you said, for the last 3 sessions now. So, about a 100-odd point cut on the Nifty. The Bank Nifty recovering from the day's low and not so bad. I mean, actually, for the Nifty Bank, we closed at the day's highest point after falling to about 47,300, which is around where the day's low was. For the broader market, actually, it was a good session. And I think that is the reason why, even though on the Nifty, it looks like we're down, it was a pretty vibrant market. And lots of stocks going up with volumes, market breadth, advanced decline, etc. positive. Not as positive as it was at one point in the morning, but still more advances as compared to declines. I'll start with large caps and I'll start with what went down because, that was the broad theme. IT, Infosys was down. There was LTI, Mindtree, which was lower. And there was Wipro, which was under pressure as well. IndusInd Bank and Bajaj Finserv were some of the others. So actually, it's a mix of IT and financial services stocks, large financial services stocks, which took the market down. On the way up, Aisha did well. Titan stood out. Divi's Laboratories, ONGC for the second day running. And there was a HUL, which participated on the way up as well. In the broader market, I mean, I think, as I said, advanced decline was positive. Here, there was Exide. I mean, fantastic run since the time that, they tied up with the Kia and Hyundai, and 12% move at the day's high here for Exide. Bharti Hexacom recent listing, big gain. Senco, which reported its 4th quarter business update, really going very, very well there. Viatech Vabag, we had the management recently, end of last week, big 16-17% move. There was Marksons, Titagar, Dhani Services, Exicom, Thomas Cook, Saregama, just to name a few big volume-led gainers that we had in trade. What was under pressure, I pointed out large cap IT in the broader space as well. IT services was something which lost ground. Coforge, Emphasis, OFSS, and there was Persistent, which lost as well. Infosys and Wipro both report numbers later this week. And of course, after TCS, expectations are a bit muted. PNB, Gujarat Gas, RBL Bank were other losers, and there was something like a KEI, Chola Financial Services, and Honasa, which also gave ground today. I mean, when we come back day after tomorrow here, we'll have 2 days worth of global cues to react to. And I think the number one thing to watch out is geopolitics, whether we'll have to react to sort of a response from Israel and how that would have played out as far as the feed-through for markets are concerned. Back to you.
Many thanks, Prashant. Yes, we will be reacting to global cues, but as I pointed out, markets shut tomorrow on account of Ram Navami, so we pick up on trade day after. Heightened tensions in the Middle East also pushing crude oil prices higher. Brent remains above the $90 mark after Israel indicated that it will retaliate after Iran's attack. Moody Analytics has said that prices could cross the $100 mark if Israel escalates matters. In a commentary note, Moody's has said that this will hurt economies of countries in the Asia-Pacific region. This as higher oil prices will raise the prices of food, transportation and production, derailing the region's already choppy progress on inflation. Back home, the government has hiked the windfall tax on crude petroleum by 41% from 6,800 rupees per tonne to 9,600 rupees per tonne. However, diesel and aviation turbine fuel will continue to have a zero windfall tax rate. The new rate will be effective from today. This is part of the fortnightly windfall tax review. The big global story: tensions continue to rise between Iran and Israel, with leaders from both nations escalating the war of words. The Israeli War Cabinet weighing on a potential response to Iran's weekend drone and missile strikes, which were mostly intercepted. Iran's President Ibrahim Raisi has called its attack as an act of legitimate defense, further warned that the smallest action against Iran's interests will be met with a severe, extensive and painful response. Meanwhile, Israel has urged at least 32 countries to place sanctions on Iran's missile project and declare its Revolutionary Guard Corps as a terrorist organization. Iran has temporarily closed its nuclear facilities in anticipation of potential Israeli attacks. The U.S. National Security Advisor Jake Sullivan has postponed his visit to India, which was scheduled this week. This on account of ongoing tensions in the Middle East. Meanwhile, Western nations have slammed Iran's actions, called for de-escalation in the region.
This was an attack unprecedented in its scope and in its scale. In its scope, because it represented the first direct attack by Iran on Israel. In its scale, because, as I said, there were more than 300 munitions fired, including ballistic missiles. The U.S. is committed to Israel's defense. And I think what this weekend demonstrated is that Israel did not have to and does not have to defend itself alone when it is the victim of an aggression, the victim of an attack. In the 36 hours since, we have been coordinating a diplomatic response to seek to prevent escalation.
Although the Middle East is thousands of miles away, it has a direct effect on our security and prosperity at home. So we are working urgently with our allies to de-escalate the situation and prevent further bloodshed. We want to see calmer heads prevail, and we are directing all our diplomatic efforts to that end. I will also shortly be speaking to Prime Minister Netanyahu to express our solidarity with Israel in the face of this attack and to discuss how we can prevent further escalation. All sides must show restraint. The conflict in Gaza must end.
Iran has no intention of intensifying regional tensions. I stress again that Iran abides by the Charter of the UN and the principles of international law. Iran's attack on Israel is proportionate and legal.
We are closely assessing the situation. We remain at our highest level of readiness. Iran will face the consequences for its actions. We will choose our response accordingly.
Well, that is the latest in the war between Israel and Iran. The big corporate story, Aditya Birla Group making another consumer push. This after its foray into the paints business. The group has launched a new financial services app. Aditya Birla Capital launched an app called ABCD to augment digital services. The app will be a direct-to-consumer omni-channel platform selling various financial services products of the company. The app is slated to have 22 products, including UPI payments, among others. Launching the app, Kumar Birla called it a coming-of-age moment for the Aditya Birla Group. The group also reiterated plans to enter the jewellery business with an outlay of 5,000 crore rupees. That should take place over the next few months. The organised jewellery market in India is likely to account for 40% of the overall industry by 2025.
The genesis of Aditya Birla Capital Digital, or ABCD, lies in our endeavour to adapt and address the shifting consumer preferences and build an omni-channel layer to meet all of their financial needs. The ABCD D2C platform offers a comprehensive portfolio of 22 products and services. This includes core financing products from our lending, insurance and investment businesses. The platform also features ABCD's own stack of products. Plan is to acquire 30 million new customers in the next 3 years. The launch of 2 new consumer-facing ventures marks the group's commitment to constructing a growth platform characterized by a unique confluence of strength and breadth. Just last month, we launched our paints business with an initial investment of rupees 10,000 crores, as you know, and in a few months, we will be launching a jewelry retail venture with an initial investment of rupees 5,000 crores.
Well, that's Kumar Birla. The Aditya Birla Group has been steadily increasing its bets on consumer-facing businesses. Nimesh is here with a snapshot of the recent expansion drive. Nimesh.
Well, Shirin, it looks like the Birla Group is now making all the right noise and focusing on the B2C business going forward. So let's revisit what the group has done in the last 1 year. If you look at the group market cap, they've added 2 lakh crores of market cap in the last 1 year, and now they command a market cap of 7 lakh crores. That's across the group. Now, if you look at the individual companies, the first is Vodafone Idea. The promoters have already infused 2,075 crores in Vodafone Idea, and this week there will be a large fundraising of FPO from the investors. The big focus will be on 5G and 4G capex going forward. What has the stock done? The stock is nearly doubled in the last 1 year, up 120%. The second group is Aditya Birla Capital. Today they've announced the omni-channel platform Aditya Birla Capital Digital. Now, that's going to be a B2C platform for retail investors. Also, they've announced the amalgamation of the Aditya Birla Fashion to create a large unified operating NBFC. Ever since the CEO joined a year and a half back, the stock has also doubled, is up almost 120%. That is Aditya Birla Capital as well. The third stock is Aditya Birla Fashion. Even here, it looks like they're making all the right noise from an investor perspective. Recently, they have announced the vertical demerger of Mundra Lifestyle and the fashion business into separate entities. Just a week before that announcement, government of Singapore actually converted the warrants into equity. So that shows a confidence in that group as well. The stock has been an underperformer, even in terms of valuations. If you look at the peers, Aditya Birla Fashion is trading at close to 33 times on FY26 price to earning, whereas Trent is quoting at almost 90 times. So a bit of catch-up maybe there as well. The fourth company is UltraTech Cement. There they've reaffirmed the position as a % cement player, and they've announced a capex of almost 32,000 crores in the cement business as well. What has the stock done? Up nearly 40% in the last 30% in the last 1 year. The next group is Grasim. Even in Grasim, they've announced a big, ambitious focus into the paints business. So they've guided for 10,000 crores of revenue and turning profitable in the next 3 years in the paints business as well. The stock is up 48% in the last 1 year. And the last is, now look at the overall picture. In terms of 5-year revenue CAGR, the biggest growth has come in Aditya Birla Capital. They've grown at 22%. Grasim has grown at 16% on a 5-year revenue CAGR, whereas Vodafone has just grown at 8%. If you look at the profit CAGR, there again, Aditya Birla Capital stands out, 47% PAT CAGR over the last 5 years. Grasim has done 21%, UltraTech Cement close to 18%, and Hindalco has even grown PAT at 11%. At a group level, which has been the biggest concern, that's the debt. Now, Vodafone is sitting on a debt of close to 2.4 lakh crore. Grasim at 1.2 lakh crore. Even Hindalco is sitting at close to 65,000 crores of debt, and Aditya Birla Capital has close to 9,000 crores of debt. So while they're trying to address the debt issues, but looks like it's a return of the Birla Group, and they're making all the right noise, at least for the time being.
All right, Nimish, many thanks for joining us. All of this, even as Vodafone Idea's upcoming 18,000 crore rupee follow-on public offer has received the government support. Finance Secretary TV Somanathan has said that India needs multiple telecom operators and preserving competition is a major policy goal of the government. Currently, the centre owns a 32% stake in the cash-strapped telecom company. Sapna standing by with the details. Sapna, take us through the government's position on this.
Absolutely. None other than the Finance Secretary, Mr. TV Somanathan, has come out with this statement very clearly indicating the government's support behind Vodafone Idea's upcoming FPO of around 18,000 crores. Well, the government stake is pretty much clear over here that they want to preserve competition, and that basically is an important policy goal for them because it also serves the larger interest of consumers. Very clearly, just two major operators in the market now. Third operator Vodafone almost getting kind of sidelined or pushed out of the market is not something that the government is very happy about. So as of now, they're completely behind this decision taken by Vodafone to come out with this massive fundraising program. And of course, the government stake will get diluted over a period of time as and how the FPO proceeds. So this support is very much in terms of what is the policy thinking within the government. Here again, they are pretty all right with the capital investment plans announced by the company, and they're also saying that it was to maintain this kind of spirit that way back in 2021, the government had come out with a telecom package, and this massive capital infusion in BSNL had also happened. Now let's keep in mind, however, that even in the financial year gone by, the BSNL losses have actually gone up. But government clearly sticking to the fact that they're not happy only with two telecom operators in the market, and hence full support behind the upcoming Vodafone FPO.
All right, Sapna, many thanks. And speaking of Vodafone, its fundraising plan, sources have told Money Control that the company may rope in marquee investors. Foreign investors, including GQG Capital and Fidelity, are looking to participate in the 18,000 crore rupee follow-on public offer. Domestic investors like HDFC Mutual Fund, Motilal Oswal Fund and Quant Mutual Fund are also looking to throw their hat into the ring. So how can Vodafone Idea's scripted turnaround? Rima is standing by with her take. Rima, it is a challenging turnaround plan that Vodafone Idea will have to script. Take us through what is going to be key to ensure that it fructifies.
Thanks so much for that. So, the question that we're asking right now is the cycle turning for Vodafone Idea, and what can the company do to turn around its fortunes? But before that, a quick check on where the company currently stands. The company has reported losses for every single quarter since its merger, 22 quarters and counting. Its market share has fallen 19% since its merger. It was 35%, the market leader when it merged, and it's now down to 16 to 17%. The debt on the books is in excess of 2 lakh crore rupees, and its ARPU is lower than peers. Now, if it has to script a turnaround, these are three things that the company can do. Number one, arrest its subscriber market share decline. That can happen by increasing its capex. As we said, the company's market share has fallen 19% since the time of the merger. For that, if the company has to arrest its market share decline, it needs to invest in capex. Capex needs capital, and capital was the biggest constraint for the company. With this fundraise of 18,000 crore of an FPO, plus the promoter infusion of 2,075 crore, the company will have an equity capital of about 20,000 crore rupees, which should help the company in closing a bank funding of 25,000 crores very soon. So the company could be left with potential 45,000 crore rupees of capital, and this money will be used for its much needed capex. The company has said that 70% of its FPO proceeds of 18,000 crore will be for boosting 4G coverage, capacity, and start their 5G rollout. The company plans to start its 5G rollout and cover 40% of its revenue base in the next 24 to 30 months. And with that, the company will hope that its market share losses will at least get arrested. The second thing that the company can do is improve its cash flows by improving its ARPUs. Now, Vodafone Idea's ARPUs are lower than peers. Vodafone Idea is currently at 145 rupees per share. Bharti is in excess of 200 rupees. One of the reasons why Vodafone Idea's ARPUs are lower than its peers, and it stands at 42%, was because the company could not invest in capex. But the hope is that the company converts these 2G subscribers to higher value plans, to 4G plans, and this premiumization can boost the company's ARPUs. Also here, a tariff will help. tariffs in India are the lowest in the world. It's 1/3 that of China and almost 1/20th that of developed economies. So while the company or none of the telecom companies are committing to when a tariff hike will take place, there is a strong case for one and of a magnitude which is similar to what we've seen in the past, that is a 20% tariff hike. So a tariff hike coupled with upgrading its existing 2G subscriber base to 4G provides the company a clear runway to improve its ARPUs. But the question is, will that be enough for the longer-term survival of the company? And the answer here is probably not. So the number 3 thing, perhaps, that the company will need is some government support to remain competitive for longer term. Now, as we said, the company owes the government about 2 lakh crore. This includes deferred spectrum liabilities plus their AGR dues. The company has massive repayments, 29,100 crore in H2 of FY26 and 43,000 crore annually over FY27 to FY31 once the 4-year moratorium ends in September of 2025. Now, the Kotak math shows that if Vodafone Idea has to service these government dues post the moratorium, it will require a 134% jump in its ARPU. ARPU needs to hit 340. But tariff hikes of these magnitude don't really look very feasible or real estate. So the street fears that if Vodafone Idea is not able to meet these obligations, then the government will convert its dues, its debt into equity, resulting in a very large dilution. Perhaps 76%. So with that, the government stake can potentially go up to 81% and the promoter's stake can fall to 9%. So the best case for long-term survival, perhaps for the company, could be an extension of the moratorium or at least a partial complete relief on the AGR due. For now, the government does seem to be standing firmly behind the struggling telecom operator.
Rima, many thanks for joining us. Yes, it will be a challenging turnaround plan for Vodafone Idea. Indian domestic airlines carried over 1.3 crore passengers in March, and this is up 4% when compared to February. As per data released by the DGCA, Indigo maintained its top spot with a market share of over 60.5%. This was followed by Air India with a market share of 13% and SpiceJet with over 5%. Vistara's market share dropped marginally to 9.6% on a month-on-month basis. Fintech major BharatPe has elevated Nalin Negi as its chief executive officer. Negi has been serving the company as its CFO since 2022 and was appointed as the interim CEO in early 2023. BharatPe said its operational revenue has nearly tripled in FY23 under Negi's leadership. We will head into a break, but up next, Baba Ramdev appears for the 3rd time in the Patanjali contempt case, addresses the Supreme Court directly, proposes a public apology. That and more when we return. The other global headlines this evening: China's economy accelerated faster than expected in the first quarter of 2024. As per the country's national data, GDP in the January to March period rose 5.3% on an annual basis, ahead of analyst estimates. This expansion was largely driven by a growth in export volume and manufacturing outperformance. Meanwhile, industrial output in March rose 4.5% year-on-year, missing street estimates. Telecom equipment maker Ericsson's first quarter profits ahead of estimates owing to a one-off gain. Gross margins also improved, beating estimates. Ericsson said the uptick was driven by a competitive product lineup, cost management strategies and increased IPR licensing revenues. The company says sales might stabilize in the second half of the year despite weak demand for 5G gear. The US announced grants of up to $6.4 billion to Samsung for the production of semiconductors in Texas. The Korean chip major is expected to invest over $40 billion and create 20,000 jobs in the country. This is the 3rd largest grant by the US government under the CHIPS Act. Back home, the latest in the Patanjali contempt case, where Baba Ramdev appeared in the Supreme Court for the 3rd time. Addressing the apex court directly, Ramdev expressed unconditional apology for publishing misleading advertisements. However, the court observed that he was apologizing only because his back was against the wall. Ashmit standing by with more. Ashmit, Baba Ramdev offering to tender an apology, but the court summoning him back for another hearing on the 23rd?
Well, this was the 3rd time that Baba Ramdev appeared in person before the top court, and the Supreme Court didn't quite make it easy. The Supreme Court asked some tough questions. Baba Ramdev addressed himself the apex court. He addressed in Hindi, where he said that Ayurveda was called a pseudoscience, that it was in a fit of rage that he launched the campaign that he did against allopathic medicine, that he has no grounds against allopathic medicine, that he's not trying to impinge on the majesty of the court, he's not trying to violate the court orders, that this is a mistake that they did, that they give an assurance that they will not repeat this mistake once again, will be more mindful with respect to their conduct, and also importantly, through their lawyer, Mukul Rohatgi, submitted before the top court that they are even willing to submit a public apology. What shape and form that takes, it could be in the form of a newspaper. That is something that the lawyers were hinting at. So a public apology could be in the works. That's coming from Baba Ramdev. The apex court, however, was not fully convinced. The Supreme Court observed that Baba Ramdev is not as innocent as he's trying to make it out to be. The Supreme Court observed that after the apex court had passed the order, Baba Ramdev was bold enough to do a press conference, in fact chastising the apex court orders. In fact, the Supreme Court observed that the only reason this apology is coming from Baba Ramdev is because Baba Ramdev has his back against the wall in light of these contempt proceedings here. And at this point, the apex court was mindful to point out that they're still not convinced about accepting the apology and that Baba Ramdev is not off the hook yet. So ominous words those coming in from the apex court for Baba Ramdev. For now though, the apex court has halted, has paused on passing any contempt orders against him, has allowed him this week's time. April 23rd is when the apex court will resume hearing in this case again, and that's when we'll get more clarity whether a public apology is issued, whether that public apology manages to convince the apex court, and whether or not the apex court will contemplate, will think of taking any adversarial action against Baba Ramdev. Back to you.
Ashwin, many thanks for joining us. Shifting focus to our election coverage, Prime Minister Modi began campaigning in Bihar, where 4 seats go to the polls in the first phase on Friday. Addressing the rally in Purnia in Bihar, the Prime Minister said the government will work towards eradicating corruption, promising people that the BJP will focus on developing infrastructure projects in the state. Congress candidate Rahul Gandhi addressed a rally in Wayanad, which goes to the polls in phase 2 on the 26th of April, alleging that the BJP and the RSS were trying to alter India's constitution, adding that the Congress and the opposition alliance were trying to save it. Gandhi will face Kerala BJP President Surendran and CPI's Annie Raja in what promises to be a 3-way contest. With that, it is a wrap on this edition of Business 360. But before we go, it is season 2 of our campaign Future Female Forward. The Mumbai chapter will take place on Thursday, the 18th of April. The theme will be the audacity of ambition. Join us on TV, on our website, CNBC-TV18.com, and across our social media handles starting 5:30 p.m. this Thursday.